Welcome back to the Deep Dive. Today, we're going to get our hands dirty with a deep dive into the world of tires.
Tires.
Yeah, with a look at the recent earnings call from CEAT Ltd, or as they're known on the Bombay Stock Exchange, CCandy.
Okay.
You sent over the transcript from the Q3F25 call, hosted by an Andrade Shares and Stockbrokers Limited.
Right.
So let's see what we can find.
Yeah, this call, it's really fascinating because it gives us a look not just at their financials, but also their overall strategy,
Yeah.
where this company is going, how they're viewing the market, all in one package.
They're a major player, and I think sometimes we take for granted these kind of everyday things like tires.
Absolutely.
We don't think about the global forces that
Yeah.
impact, just driving down the road.
It's easy to forget how complex the industry actually is.
Yeah, so let's just jump right in. CCAN had a very strong Q3, 11.6% revenue growth and 7.9% volume growth.
Those are impressive numbers.
Yeah, a lot of tires hitting the road.
A lot of rubber meeting the road. That's right. But before we get too excited, their operating margin actually shrank by 3.87% year over year. What's going on there?
Well, a lot of it has to do with the rising costs we've been seeing across the board.
Yeah.
It's hitting CKey too, particularly the price of natural rubber, which is such a crucial component.
Right.
You add to that things like the currency fluctuations that have been happening, the hiccups in the supply chain, and it creates a perfect storm.
Yeah, it seems like there are these global economic factors that are sort of, buffeting them around a little bit.
Yeah, definitely external pressures at play here.
So it's not just all internal strategy, there are some external factors as well.
Exactly.
Interesting.
And to meet those challenges, CK laid out 4 key areas they're really focusing on.
Okay.
Electrification,
Okay.
international expansion, moving into the premium market,
Right.
and embracing digital transformation.
That's quite the list.
It's ambitious.
It is. So let's break those down one by one. First up, electrification.
Okay.
Seiki is aiming for the top spot in the electric vehicle tire market.
They want to be the leader.
Yeah, and they're already off to a good start, holding 25% share of India's EV market.
Right, and that's no small feat when you consider how rapidly the EV market is growing, not just in India, but globally.
Yeah, it seems like they're really trying to anticipate that, that change that's coming and get ahead of it.
Absolutely.
Next, they're looking beyond India's borders with international expansion.
Right.
Their acquisition of Camso is a major move in that direction, boosting their global presence to 26%.
26%.
What's so special about Camso?
Well, Camso is a premium brand that's known for its off-road tires.
Okay.
So think about tires used in construction, agriculture.
Oh, okay.
So it's not just about expanding their geographic reach, it's about tapping into a different segment of the market.
A more specialized market.
Exactly.
And that's probably a good thing, right? I mean, if you can...
Absolutely. I mean, it allows them to diversify their offerings and potentially reach a customer base that's willing to pay a premium for specialized tires.
Right.
So it's a smart move strategically.
Yeah, so they're expanding their territory and they're aiming for this kind of more profitable niche market.
Exactly. It's
Yeah.
about strategic growth.
Makes sense. Then there's the move into the premium market with CEAT rolling out high-performance tires for SUVs.
Right.
They even mentioned a new tire called the CEAT, designed specifically for scooters.
For scooters.
Yeah, that's interesting.
It is. And it shows that they're not just focused on one segment of the premium market.
Right.
They're looking at different areas where they can offer a higher quality product.
Yeah, and I think, that idea of premiumization is really interesting because it speaks to this idea that, people are willing to pay more for something that they perceive as better,
Absolutely.
higher quality, longer lasting, better performance.
Right. It's about value.
Yeah,
Consumers are savvier than ever.
right.
They're willing to invest in products that offer tangible benefits.
And rounding out their strategy is this idea of digital transformation.
Right.
Their Chennai plant was recognized by the World Economic Forum as a lighthouse for its use of cutting-edge tech.
That's a big deal.
It is. And it's really cool that they're not just embracing technology for technology's sake.
Right.
They're actually using it to improve efficiency and make better tires.
It's about tangible results,
Yeah.
using data and technology to optimize their entire manufacturing process.
So they're going electric, expanding globally, moving upmarket, and embracing digital tools. That sounds like a pretty comprehensive strategy.
It does. It seems like they've really thought this through.
Yeah, but what's their take on the market overall? Because we've talked about all these different things that they're doing internally.
Right.
But what about the market conditions that they're facing?
Right. Well, they seem pretty optimistic about two-wheelers and the truck and bus segments.
Yeah, okay.
They're predicting some pretty healthy growth there.
Mm.
But when it comes to passenger cars, they're expecting things to stay relatively flat.
Okay, so maybe not a lot of growth
Not as much, no.
in the passenger car market.
Right. And that makes sense when you consider how competitive that segment is.
Yeah, I mean, it's a very crowded market.
Extremely crowded.
Yeah, so it's interesting that they're kind of, trying to carve out these more specialized niches
Right.
while also acknowledging that, maybe the passenger car market isn't going to be the huge growth area.
It's about recognizing where the opportunities are
Right.
and adapting accordingly.
And of course, they have to contend with those external factors we talked about.
Right.
Geopolitical instability, currency fluctuations, the rising cost of raw materials.
It's a lot to juggle.
It is. So what concrete steps are they taking to sort of address those challenges and seize the opportunities?
Well, one of the things they mentioned is their plan to expand the capacity of their Chennai plant. And they're also making a big push to increase their market share in the passenger car segment, specifically by focusing on the growing SUV market.
The SUV market, that's really interesting.
It is. It's a booming segment
Yeah.
and one where consumers are often willing to pay a premium for quality tires.
Right. So it's a smart move on their part to kind of focus on that area where there's both growth and the potential for higher margins.
Absolutely. It aligns perfectly with their overall strategy.
Now, they mentioned expanding their Chennai plant capacity.
Yes.
Are they planning to build a whole new factory?
Actually, they're taking a different approach.
Okay.
They're going with what's called a brownfield expansion.
Brownfield expansion. Now,
Mhm.
what exactly does that mean?
Basically, instead of building a brand new factory from scratch, they're going to expand and upgrade their existing Chennai plant.
Oh,
So it's more about optimizing what they already have.
so it's like adding an extension to your house instead of building a new one.
Exactly. A much
Okay.
more cost-effective approach.
That makes sense.
And it allows them to integrate all those new technologies and processes we talked about into their existing operations.
Yeah, so they're expanding strategically, they're focusing on a high growth segment, and they're being smart about how they're using their resources.
Right.
It sounds like CEAT is really firing on all cylinders here.
They are. They're a company to watch.
Yeah, even in a challenging market, they seem to be doing really well. But let's shift gears a little bit and talk about the numbers.
Okay.
The transcript provides a really detailed breakdown of CAT's financials.
Yeah, it does.
And I think there are some interesting insights to be found there. So
Definitely.
let's dig into that next.
Let's do it. We'll see how those rising raw material costs are actually playing out in their bottom line.
Yeah, and how they're managing things like cash flow and debt and capital investments.
All the juicy details.
All right, so stay tuned as we continue our deep dive into CEAT's world, and we'll be back in a flash.
We'll be right back.
Okay, so we're back, and we're still digging into CEAT's Q3 FY25 earnings call. Still rolling.
That's right. We talked about their growth. We talked about their strategy. So now let's take a closer look at their financial performance.
Yeah, let's get into the numbers.
We left off talking about rising raw material costs. So how is that impacting their bottom line?
Well, the transcript shows their operating margin took a hit,
Yeah.
contracting by 3.87% year over year. And as we discussed, the rising cost of natural rubber is a big factor there.
Right. So even though they're selling more tires, those rising costs are eating into their profits.
Yeah, it's a tough situation for a lot of companies right now.
Yeah, so how is Seiken trying to navigate this? Are they just sort of, accepting the hit to their profitability?
Not at all. They're definitely taking steps to mitigate the impact.
Okay.
The transcript mentions some cost management strategies they've been putting in place.
Can you give us an example of what those might look like?
Sure, one thing they've done is reduce their stockpile of natural rubber.
Okay.
They're hoping to buy more when prices stabilize a little bit. So they're kind of waiting it out a little bit.
Yeah, it's a bit of a calculated risk.
Right.
They're betting that the current high prices aren't sustainable,
Yeah. Makes sense.
but it shows they're actively managing the situation.
Okay, so let's move on to revenue. CT reported consolidated revenue of almost 3,300 crores, which is a year-over-year growth of about 11.4%.
That's pretty impressive growth.
It is, especially considering everything we just talked about.
Yeah, and remember, this growth is coming from all areas of their business.
Mm-hmm.
Replacement tires, exports, OEM sales. It's not just one segment driving this growth.
Right, so it's a really diversified revenue stream.
Exactly. A good sign of a healthy business.
Now, the transcript also highlights CT's capital expenditure, which came in at 283 crores during Q3. This brings their total capital expenditure for the first 9 months of the year to 713 crores.
Right.
And it looks like they're on track to meet their full-year estimate of around 1,500 crores.
Seems like it.
For those of us who aren't financial wizards, can you break down what capital expenditure means in simple terms?
Sure, think of it as money they're investing back into the business for future growth.
Okay.
Could be things like buying new equipment, upgrading their factories, investing in new technology, all aimed at making the company stronger in the long run.
So it's a sign that they're confident about their future prospects?
Yeah, they're putting their money where their mouth is.
That's good, and that's a good sign for investors.
Definitely a positive indicator.
Now let's talk about working capital. The transcript mentions that CT managed to reduce their working capital by about 84 crores during Q3.
Okay.
What's the significance of that?
Well, working capital is basically the cash a company has available to cover its short-term expenses and obligations.
Right.
So by reducing their working capital, they're freeing up cash that they can use for other purposes.
Like what? Give us some examples.
They could use it to invest in those growth opportunities we were talking about earlier. Expanding that Chennai plant, developing new product lines, or they can use it to pay down debt, maybe even buy back some of their own stock.
So it's about having flexibility.
Exactly. Financial flexibility is crucial in a volatile market.
And speaking of debt, CAT's debt levels actually came down by about 50 crores from the previous quarter, ending up at 1,835 crores. That sounds like good news.
Yeah, definitely a step in the right direction.
What's interesting is that most of that debt reduction happened towards the end of the quarter.
Yeah, that caught my eye too.
What do you make of that?
I think it shows they're being proactive about managing their debt and trying to improve their overall financial position.
So they're not just letting things happen, they're actively managing their debt.
Exactly. It's strategic financial management.
Okay, so we talked earlier about CAT's international expansion, specifically their acquisition of Campso. The transcript really highlights how important this move is for them.
Yeah, it's a key part of their growth strategy.
They want to be a global player.
Exactly. Not just a big fish in the Indian market. They want to compete on the world stage.
But do they have the financial muscle to pull that off?
Well, their financials suggest they're in a pretty solid position.
Okay.
Diversified revenue, investing in growth, managing their debt, being smart about working capital. It all paints a picture of a company that's prepared for the challenges ahead.
Plus, they've got Campso now, which specializes in those off-road tires.
Right. Those off-road tires usually have higher margins than your typical passenger car tires.
So it's a strategic move, both in terms of expanding their product portfolio and increasing their profit potential.
Absolutely. They're diversifying and aiming for higher profitability.
So they're expanding globally, they're diversifying their products, and they're keeping a close eye on their finances. It sounds like they're setting themselves up for success.
They're definitely making all the right moves.
But of course, the global market is unpredictable.
Always.
So their ability to adapt and navigate those challenges is going to be key.
Absolutely. That's the true test of any business.
Now, there's one more key piece of CAC's strategy that we need to explore, their focus on premiumization.
Yes, that's a big one.
We touched on it earlier, but let's dig deeper into how they're targeting that premium tire segment, developing those innovative products, and building a brand that resonates with consumers who are willing to pay more for quality and performance.
That's where we'll pick up in the final part of our deep dive. We'll explore how CEAT is driving innovation and aiming for the top tier of the tire market.
Stay tuned for part 3, where we'll continue our exploration of CEAT and the world of tires. All right, we're back for the final part of our deep dive into CT's Q3 FY25 earnings call.
The home stretch.
We've covered their growth, their financials, and now it's time to really focus on their push into the premium tire market.
Yeah, they're not just aiming to be a big player. They want to be the name in premium tires.
Yeah, and from what we saw in the transcript, they're not messing around.
No, they're serious about this.
They're talking about real innovation,
Right.
Performance enhancements.
It's not just marketing fluff.
Yeah, it seems like they're really trying to build a better tire.
They are.
Now, the transcript mentioned their focus on the premium SUV segment. What kind of innovations are they bringing to the table for SUV drivers?
Well, you got to think about what matters to people who drive SUVs.
Yeah.
Enhanced grip for better handling, especially in challenging conditions.
Right, because SUVs are often driven off-road.
Exactly.
They know they need tires that can handle that.
Tires that can handle dirt, gravel, snow, all of that.
All right.
They're also focusing on things like a smoother, quieter ride,
Okay.
and even features that improve fuel efficiency, which is a big concern for a lot of SUV drivers.
Makes sense.
So they're really trying to hit all the key points.
They even mention a new tire designed specifically for scooters, the CEAT. I'm curious about that one.
Yeah, that's interesting.
What makes it a premium tire for scooter riders?
Well, I think it shows that CEAT understands that even scooter riders are becoming more discerning.
Right.
They're not just looking for the cheapest option anymore.
Yeah, they want quality too.
Exactly. They want performance.
Right.
They want safety.
So CAT is really trying to cater to a wider range of consumers.
They are. They're trying to cover all the bases.
Now, there's another aspect of SACT's premiumization strategy that I found really interesting, their commitment to sustainability.
Yes, that's a big part of it.
The transcript highlighted their focus on reducing rolling resistance in their tires. For those who aren't familiar with that term, can you explain what rolling resistance is and why it matters?
Sure. Imagine you're pushing a heavy box across the floor. The harder it is to push, the more resistance there is.
Okay.
Rolling resistance is similar. It's the force that opposes the rolling motion of a tire.
Okay, so the lower the rolling resistance.
The less energy it takes to move the vehicle.
And that
So
means...
it's better fuel efficiency.
So it's good for both the driver and the environment.
Exactly. It's a win-win.
And it seems like SACT is really trying to align their premium offerings with this broader shift towards sustainability.
They are. They're recognizing that consumers care about these things.
And they're willing to pay for it.
Absolutely. Especially in the premium segment.
Now we can't forget about TAT's emphasis on digital transformation.
Right.
Remember how we talked about their Chennai plant being recognized by the World Economic Forum as a lighthouse for its use of advanced technologies?
Yes. A great example of how they're embracing technology.
Well, it seems like that digital transformation is directly linked to their premiumization strategy.
Absolutely. By leveraging technologies like AI and automation, they can produce higher quality tires with greater precision and consistency.
So it's not just about making tires faster or cheaper.
No, it's about making them better.
Okay, so we've covered a lot of ground here. We've explored CEAT's financials, their strategic acquisitions, their international expansion, and now their premiumization strategy.
Quite a journey.
It's clear that they're a company that's not afraid to make bold moves and adapt to a changing market.
They're definitely forward-thinking.
So what are your final thoughts on CEAT?
I'm impressed. They're clearly a company that's committed to innovation and growth.
Yeah, it's been a fascinating deep dive into their world and into the evolving tire industry as a whole.
It has. But the real value comes from taking what we've learned here and applying it to our own understanding of the market.
Right.
Think about it this way. What aspects of Psyche's strategy resonated most with you? Do you see similar trends emerging in other industries? And here's a final thought. As electric vehicles become more mainstream, how will that impact the design and demand for tires? It's an exciting time to be following the automotive industry, and Psyche is definitely a company to watch.
Agreed. Until next time, keep asking questions, keep exploring, and keep diving deep.